Hi everyone, today let's get into my quarterly update. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. I wanted to start off this update by showing what the quarter looked like for the charts. So you can see here 2 January was the start of the quarter, and that opened up at 472.60, and you can see we're all the way up at 523. So it's been quite a bit of a run, and looking at it here, you can see markets are up almost 11%, 10.5% right in that range, just for some reference. Starting off with Lending Club, I just wanted to show that this still does exist. You can see account value about $700. This closed a long time ago, but I'm still waiting for these notes to get all the way paid off, and I just withdraw this money as it becomes available. Moving over to Worthy Pure Capital, I still have about $5,500 here. This money is still frozen. It's in the earliest funds. You can see Worthy Pure Capital where all of that money is. This fund is still frozen. My understanding is that their subsequent funds are still doing fine and they're offering 7% on bonds. But because of COVID, these companies that they lended to in this first offering were not able to pay back their loans, and they're still figuring out how they're going to handle that. So right now, not a huge fan of Worthy because they can't pay back, but in theory, their bonds are supposed to be liquid. Moving over to Groundfloor, I have been slowly withdrawing a little bit of money here and there. It's still doing okay, a little bit over $11,000, and you can see actual rate of return 8.9%. So not terrible. The expected rate was about 2% higher, so definitely seeing some foreclosures, and typically I get about 70% of my money back on those notes, and I am very diversified, and you can see what that looks like here under LRO investments. You can see all of these notes that are in default, and if you click on any of them, you can see what's going on with it. You can see the asset was repossessed, and it was listed for sale, and then they're going to try to sell it, and then whatever proceeds they get back, they pay the note. So that's usually how it works, and they've been doing an okay job with it. Like I said, I'm still returning about 9%, which is a little bit less than I would have wanted to see, but 9% isn't terrible. Like I said, I've been investing in some safer notes here most recently, and I've been moving this money out very slowly. Moving over to Fundrise, this account seems to have bottomed out here a little bit. It was down around 3.3% annualized returns, and you can see it kind of bottomed out right here at the beginning of the year, and slowly it's been trending up, and that has been net returns. You can see $5,700 net returns. We were down at $4,800 at the end of the year last year, so we're seeing a little bit of gains there. You like to see it. And they did put out a note. They think the real estate market has bottomed. I believe I did an update on that as well, so definitely check that out. And then looking at the portfolio breakdown, you can see the vast majority of my money is in their main real estate funds. In terms of dollars, that's about $46,000, so pretty substantial. And you can see last year was not a great year. So far, we're getting some gains this year. Still 18% overall, which is decent, but not great considering how much markets were up during that time period. They held really steady during the COVID dip, which was nice, but they haven't kept up with markets here recently. And then you can see the other funds. This is the Fundrise IPO that I own some in. Venture capital, this is where they're investing in innovative tech. And then private credit. This has been a very strong performer here recently. This is their debt fund, and it seems like they might want to do a little bit more with that. And I have been investing pretty heavily in their debt fund. That's where pretty much all of my money most recently has been going into. I think I own enough of their real estate funds. If they do well, I also will do well. But I think private credit seems to be the best opportunity with Fundrise right now. Moving over to my M1 account. This is a regular taxable account. I call it higher yield savings because these are generally safer investments. Lots of bonds, lots of real estate, dividend paying style stocks. And you can see I've actually made some decent changes here. I've changed my allocations. I own a little bit less real estate and a little bit less of growth tech. I've moved completely out of the Vanguard NASDAQ fund, and I moved that money here into JEPEQ and JEPI. These are the covered call ETFs from JP Morgan on the NASDAQ and the S&P 500. So they pay a lot of dividends every single month. So again, dividend focused. You can see dividend growth here. These are international funds, and then I have bonds. So I have midterm bonds as well as bank balance sheet. Bank balance sheet hasn't been doing great, but even with a 4% move, this is a small holding, and they've paid a lot more than this in dividends. And then stocks, just a little bit here, which actually have been doing quite well. This is the all-time performance. So everything pretty much is up except for those bank balance sheets. And you can see here, market gain 3,300 and then dividends over $2,000. So almost half of my gains have been dividends in this account. And that is the main purpose of it. And then looking a little bit closer into the real estate, you can see it is diversified into a bunch of different funds, not only individual stocks within the real estate space, but I also own Fidelity Real Estate, and Vanguard real estate funds. So diversified funds within my pie, and then some individual stocks that I picked a long time ago. And again, you can see dividends outperforming market gains here in the real estate fund. So it is making money, and dividends are the focus. And then just for some knowledge here, you're looking at my midterm bonds. You can see midterm Vanguard funds, several of those. Got some tips that I bought when the yields are very high on those tip funds, and then some international funds as well. Again, all of these are focused on dividends, market gain, not very much, dividend returns quite a bit more. And then lastly, for some stocks, that's most of the biggest stocks that you would think of: Amazon, Costco, Domino's, Yum Brands, mostly focused in food. Again, dividend payers, some oil stocks in there. Nothing unusual as you would expect. A little bit of dividends and some nice market gains there as well. And then moving over to my TSP, my government retirement account. These are all retirement funds, and you can see my breakdown. A little bit of cash, and what they call cash is actually government bonds. And then you can see corporate bonds here at 12%. So between those, a little bit more than 20%. And then the rest of that is stocks. Still rather young, so pretty aggressive on the fund. You can see a little bit over 9,000. G fund, which is those government bonds. F fund being corporate debt, almost 12,000. And then C fund is the S&P 500, so 44,000 there. And then S fund, 33,000, which is your total stock market fund. So just under 100,000 in my retirement account. And then lastly, of course, if you watch my daily content, I have my trading accounts. This is where I have the majority of my money, and I focus this on NASDAQ covered calls, as well as IWM covered calls and poor man's covered calls. So based on the NASDAQ and the IWM stock holdings. And then in terms of growth, it's been a pretty good year so far. I started out around 105,000 for the year. I've definitely added some money. That's obviously not all gains. You can see year-to-date profits just short of 5.7% based on my initial holding of 105,000. And like I said, the S&P 500 is up a little bit more than 10%. The NASDAQ a little bit less at around 7.5%. So I'm doing fairly well keeping up with the markets while still giving myself significantly better risk reward to the downside. And then looking at my overall results here for the quarter, you can see most of it was in the green. Trading accounts doing very well. Stock holdings and bond holdings, I actually withdrew fairly a decent amount of money there and then moved it over into my trading accounts. As you saw, I was up just short of $6,000, but I've definitely moved a bunch of money in here. You can see it was at 106 on 1 January and then here at 130,000. So I've moved some money in there. Most of that money came from some of my stock holdings, a little bit of bond holdings. You can see my cash was drawn down a little bit as well. So some money was moved into there, and then market gains, and then some of the money from my paycheck on a monthly basis. So some money getting pushed in there. Overall, this is a new all-time high, $330,000. So 30 March would be my new peak, and I will change this to reflect that for the next video. Let me know down in the comment section what you think of my current investment holdings. If you have any questions, definitely throw those down in the comment section. I think quarterly is the right way to go with these kind of videos, and if you like them, definitely comment as well. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your investing and have a great day.